Welcome to After Hours at TradersPost. I'm Tom Hartman, marketing manager here at TradersPost, joined by Mike NQ Sniper Christensen, who's this co-founder and CSO of TradersPost.
I like
How's it
how
going,
my
Mike?
nickname changes like every time we do this show. Please keep them coming.
I'm trying to settle on one I like the most. NQ Sniper came here the second time. Keep thinking something different. This show, we're going to be going over the predictions we made in 2024, the good, the bad, and the ugly, to see what we could have done differently and what we've learned since. And of course, we have our predictions that we're going to make for 2025, or at least the first quarter of 2025. I'm not going to make a prediction for the entire year, but we'll see.
That's about right.
I got to say, it was a fun year. It was a fun year to be doing this with you. And I think this will be the first year we're doing it straight through. So it'll be interesting what next January looks like. But I thought it might be there were a couple of assets that we really paid attention to, and that was obviously Bitcoin. In the crypto space, I cared about Cardano, so I want to touch on that today. We also had we don't have predictions for that, but I'd love to hear your predictions on Nvidia, and I cared about Tesla and stuff like that. So I thought it might be fun and painful for us to go through some of our past videos, some clips from our past videos, just to see what we said then, maybe compare a little bit of the charts now, and what good things we had, what mistakes we've made, and how we could have thought about things differently then. How does that sound to you?
That sounds good. Let's do it.
All right. So first up, we'll start with the Bitcoin one. This one was from 5 months ago. 1 second. I should have pulled up your Bitcoin chart just in case we need to switch to it quickly.
Sure. Let me pull up my more recent one and share my screen real quick here.
All right, and then I'll do mine. That's you. Okay. You'll let me know if you can hear it. 1 second.
What I was hoping for. And
Can you hear that?
Yep.
Perfect. All right. You can interject at any point. I'm not going to play the whole clip through, just the certain parts that matter.
This is perfect. This is how you know it's old. It's in my old office here before I even got here.
That's right. You're almost in sepia tone. That's how old it is. All right, let's hear.
Low, but I was looking at that 0.5 retracement level. That's what I was hoping for. And we're about ready to close against a slower 8 EMA on the daily chart. I'd like to see some confirmation here of potential for a continuation in a move upward. But what I found fascinating was that increase in global liquidity. Now, we haven't quite pushed beyond the highest level of this index, which was back in February of 23 or January of 23. But that we broke a recent high tells me something here. I mean, this horizontal line here should kind of tell us something that we're pushing above, and that's promising in terms of how much capital might be on the sidelines for the crypto markets.
Ooh, baby, you're looking at this is the face of a Tom Hartman who's about to go levered long 50x on Bitcoin after this call. That's what's happening.
All right.
All right, so that was fun for me. The what has been like the solid through line that we've had for this year was this introduction of liquidity. I know for I don't know, I don't hear about it much. I hear about it more now, but even now I'm not hearing just regular traders talk about global dollar liquidity levels and how important that is for asset markets. Is that something you were always paying attention to?
Not necessarily. I mean, I've placed a lot more of my attention on actual traded volume more than anything else, but global liquidity ended up becoming a contributory indicator for us at that time. However, there are some questions to answer about why the price still pushes upward despite global liquidity pulling back at this point.
Right.
If we can share my screen real quick, we'll show what happened after I made that prediction. There was that close above that shorter term 8 EMA. And if I can turn my charts back on here, you can kind of see My thought was that we would likely see a pullback against this resistance line, which is exactly what happened. I wanted to see a close above that line to see if we can continue to march upward. But the big question was whether or not we were going to cross that $74,000 mark, and that was a projected resistance zone on my side. I know we had a couple of other updates on that one. Sure enough, I think it almost perfectly wicked that $74,000 line. It was 73,581, at least on Coinbase. Oh, this is the all-time. So this index is actually an aggregate of multiple exchanges, but it did pull back, and we saw a throwback from that trend line, and that pushed us into this new price range where we're at now, and finally actually got us where we needed to be. But getting past those resistance zones were a big one that I was waiting for. That was that confirmation zone that I've described in the past. What's interesting though is since we were talking about how far and how high global liquidity had increased since the 30th of September, that's actually pulled back quite a bit, and yet price has continued to go upward. Did you have thoughts on that divergence?
Yes, absolutely. In fact, well, I'll play something else at the same time here, right before I answer that question, because I had that same issue. Because there's one, I was making my predictions also based on what's going on with the U.S. dollar,
Right.
and if you remember, I was thinking that the dollar should pull back, and then it did it. So let me just play that one here real quick. Do I have it here? Yeah, 1 second. I'm going to redo it. Looking at for Bitcoin, actually, this is not the best chart for that. Let me quick look over here. What I'm looking at for Bitcoin, actually, this is not the best chart for that. Let me pull it up. All right, so I'm looking for price to get back to get down to here to the 50K level or around the 50K level. But anywhere around here is where I'd be thinking for a first low in like if there's going to be a bottom at all, it could be around this area here.
Mm-hmm.
Especially since for the dollar, so we got that bounce. I know we talked about this last week. We got that bounce in the dollar at the 100 level.
Yep.
We've bounced again, but it's always about the lower high, right? So the lower high over here didn't break up to this level, which is what I was sort of my doomsday scenario, like short-term doomsday scenarios, that we get back up to 102. We didn't. So my question is, if this bounce is the bounce that leads us there, if this is the higher low. But even if it is, it does, to me, suggest that we're going to be moving sideways through this area before we then eventually break down below 100, which is then bullish for crypto and for assets. What are you thinking as far as price for Bitcoin?
I think that.
All right. So if you're noticing that there, I was right about where Bitcoin should bottom. Let me just pull up the chart real quick right here.
Yeah, that was just prior to.
Yeah, so that video here was talking about over here
Yep.
in this area, and then we actually did come down here. So this seasonal wave has been very, very good to me for that sort of thing, and it did bottom over there. But you're right, this rise happened with the dollar also rising. I mean, dramatically. So this is the US dollar. And we certainly didn't stop at that level I was talking about in the video. We cleared it. I mean, we cleared it to a local high. We pulled back and even moving up still.
Mm-hmm.
While bond yields pretty much stayed a little bit flat, which we'll talk about in a little bit. So what I'm wondering about here is if I should just also mention at the same time, the NASDAQ, so gold stayed stagnant, and the NASDAQ and the S&P, although they reached the highs that we were talking about, like 6,100 on the SPY, we've actually just been pulling back from there. So I'm wondering, let me know if you think this is far-fetched. I'm wondering if the Michael Saylor trade is pushing Bitcoin up that is then pushing up the entire complex up on leverage, because it's not being supported by liquidity flows, like global dollar liquidity flows. Um, and we're essentially moving, just marching up and to the right, where nothing else is really Tesla's pulling back, MicroStrategy's pulling back, SPY, Nasdaq, gold hasn't made a new high at all, but Bitcoin is just rose like crazy. Could it be in a Michael Saylor trade?
I guess that's kind of hard to say, and I wouldn't say that Bitcoin is much different than the S&P 500 or Nasdaq at the moment. It's also posted a lower high and currently retesting that lower high as well. So the question I have is whether we see a continued pullback for Bitcoin from here.
Well, what about if you consider because the rise that we had,
Mhm.
so in October, so this rise in Bitcoin happened, this breakout happened on October 11th, right? And then Bitcoin moved up 74% from there. But around that same time in for SPY, we already moved up 5%, and a little bit more for the Nasdaq. October, fine, a little bit more for Nasdaq, 9%.
Mhm.
To me, that's nothing comparable to this massive move up that we received.
Oh, sure,
This to
sure.
me is
Okay.
like super
Yeah. In
suspicious.
percentage terms, for sure. I mean, there's no question Bitcoin took the cake last year.
And then the rise up, and this is the other thing that I want to take away that you taught me, and you pointed me to, and I'm just so happy for it. If I take a look at here, let me just remove you, and I just put on the VWAP waves. So these are the daily, weekly, monthly, 3-month VWAPs. The price up, how we moved up since October, has essentially been at let it load. It's been marching right along these daily VWAP levels. It's just been so consistently moving up. And there was something that Michael Saylor had said in a video that we reviewed on, I don't know, yeah, it was on After Hours one of these past weeks, and he said something that was, someone asked him, a newscaster asked him, "How are you not moving the market with your buys? You're buying billions of dollars of Bitcoin. You own the MicroStrategy owns 1% and growing of the Bitcoin reserve. How are you not moving the price?" And he says, I'm paraphrasing, "We're not moving the price because we're buying um, at certain levels to hide our purchases." Well, the only way that can happen is at VWAP levels.
I mean, that's a traditional way for larger position holders to get in, for sure. I don't remember him saying that part. I'd have to go back to and actually confirm that. But typically, I think larger positions are executed in that way, where you're looking to sweep the books to get into much larger positions, or you're relying on VWAP because VWAP tends to be an area where there's a lot more volume that should show up. And you keep touching those levels over and over again. But I assume they're doing daily purchases in very small quantities and just getting in over time.
For billions of dollars worth, I would imagine it has to at least move. I mean, they have to be bouncing off of view. It's happening at the times where he says they're buying,
Mm-hmm.
and then it moves so steadily up, and then it doesn't correlate with anything else that I'm seeing in the market. So then
No,
I just
but
go, okay.
yeah, I mean, so I hear your point. Your point is the support that's being created by MicroStrategy buying Bitcoin causing other traders to jump in on what appears to be an upward trend. Couple
That's right.
that with the fact that there was this psychological expectation that we want to see Bitcoin go to 100,000. I think a lot of people rallied on that idea, especially once we crossed that $74,000 barrier.
Exactly. So we crossed to over to 100,000. We broke all the way up to 108. It fell back down to below, so 91,000, and then it's basically been consolidating in this zone since. And so because if it was happening and the correlations were matching on different assets, fine. But all my tools now that have to do with the correlation with the dollar,
Thrown out the window.
it doesn't work anymore. The dollar is essentially for a currency is essentially skyrocketing.
Mm-hmm.
And so then I go, and that should be bad for liquidity. And it is bad for liquidity on all other assets, including MSTR, but not Bitcoin. That to me doesn't make any sense. So I'm expecting, I wouldn't be surprised if we saw a massive correction in Bitcoin because, it's not really being supported by global liquidity flows. This is what makes me nervous.
Okay, so that kind of explains the divergence in global liquidity against the price. So if that helped us move to 100,000, that was a useful tool for last year. Did you want to move to another prediction we made, or start looking at where we think 2025 might go?
Yeah, let me look at one or two more here. 1 second. Okay, so forgive my little rambling over here because I just want to get this on the record here. Okay. John makes an appearance. Be either buying, not buying, or selling. Oop. Okay, so let's just go. An institution could be either buying, not buying, or selling, right? So if they're selling, then chances are they weren't buying this whole time. And the idea is that, or in my mind, once we've exhausted the selling, well, that's bullish then. If they're selling this aggressively and we're still near all-time highs, that to me is not an indication that the bottom is about to fall out, because the bottom falls out, correct me if I'm wrong, when we get gamma and the other negative gamma, where prices falling and there's these forced selling that occurs that causes these institutions to have to unload the positions. If they're scaling out of their positions and it's not causing the market to crash, isn't that bullish?
I mean,
so it actually ended up being absolutely bullish. So over here, if we take a look at the charts at the time, this was that video was from, I believe, 6 months ago.
Yeah,
and if we take a look, and so if we take a look at the markets, then we saw that we did get this the selling. This is the S&P. We were talking during this period where we were selling off, and once that selling was done, that's it.
Pushed us right back up, right?
Pushed us right back up because, as you pointed out, the liquidity flows were there. And so we just wrote that up. It's the core. All trades are a liquidity trade. Well, like it's like not the all trades, but like that's the one big trade, and it was absolutely true. And we just literally stair-stepped up. And where did it stop? When the liquidity started pulling back. That's exactly where it stopped over here. And so there's a nervousness. We've talked about it a couple of times where there's something Kim Carson keeps bringing up, and I keep bringing it up in Carson Corner, where if the scenario of the Santa Claus rally where we get this blow off top at the end of December was something I was hoping for, but it didn't happen. So, but those supportive flows, there's buying that happens at the end of December if the stock market is up that year, which happened. And those flows were enough to offset the drop in global dollar liquidity. So we have this sort of like stagnation that we had in this topping behavior here basically since November. But once those flows disappear, and they should start disappearing around the middle of January, well, then it's look out below, because there's no bullish flows until April or so. And so this is what makes me nervous. This coupled with the dollar going up and gold flat, that tells me we're going to be headed into a window of weakness without enough buying pressure.
So I'm right there with you. I think that puts me in a position where I would be looking to start to see a new break of lower lows. We had that break sort of yesterday. It wicked below the previous candle. And here I thought I was sharing my screen. My bad. I'll bring
this mine the NASDAQ.
This will be the SPY or S&P 500. So just zooming in here, you can kind of see like we had that pullback. We were hoping for a Santa Claus rally. Instead, we actually had a pretty big pullback on a single day. And that pushed us to a new low of 580. Or I'll just do SPX since we want to speak in 5,800 terms. So we pulled back to that 5,800, and then we wicked slightly below that yesterday. And I thought that was actually going to end up confirming a lower low, but instead we actually rebounded today. However, this is typically the kind of move that I would expect to see a throwback from, or excuse me, a pullback from. We already saw this as being the high. This is our second pullback, basically a lower high posted. And I would expect that there would be a third one now posted from here. If that's the case, then yeah, I'm also on the same boat. I actually expect we'll pull back even further down to the 5,600 level. Anything below that would be about a 15% pullback overall down to 5,140 or 5,100 in general. This being the major support level for the S&P 500. But the same kind of pattern seems to show up even on Bitcoin, where we're seeing confirmations of a lower high. And even today is a potential where we could close today as a lower high. And unless this pushes higher, this could also be a pullback for Bitcoin. And if it pulls back for Bitcoin, I think the overall retracement pushes us back into the $70,000 range.
Okay, so I want to ask you about your Bitcoin prediction here exactly on the heels of that, because that's what I'm worried about too. So let me just pull up something here.
Sure.
I always like sometimes getting your interpretation of my indicators because you're not like married to them. So it's fun for me. 1 second here. All right, so let's just remove mitigation levels. Okay. So like you were just saying here, we have this bounce here that happened for Bitcoin, and this teal line is my monthly volume weighted moving average. And it was a top here, it was a top here, and now we're back. And here's where I'm wondering, should I enter a short here? Like, did we get the retrace that we're gonna be getting, and now we're gonna be headed back down lower? I actually didn't take a look at your liquidity indicator beforehand, but it is still downtrending, right? It hasn't bounced at all.
Correct. Yeah. If you can pull my screen back up, you can see how I've coupled this with Bitcoin. And you can see we've been pulling back since the 30th of September, and it's been continued retracement here. So, this whole move from Bitcoin's most recent bottom, the $16,000 bottom, we've seen global liquidity rise, but we're starting to see some confirmation of lower lows consistently here on global liquidity. So I would expect this trend to continue, even while we're seeing a little bit of a pullback and some anticipation that we may even see a resurgence back up to 106, retest this high again before Bitcoin pulls back. But I'm still expecting some kind of healthy correction in both markets. And partly what I think is driving some of this is that it's just buyer exhaustion, unless there's more pressure to the upside. But even in the S&P 500, one of the things that's really concerning me is overall overvaluations. The whole S&P 500 now has reached this point where we hit a peak of roughly 38 price to earnings ratio. And the last time that we saw that number was in October of 21, before we saw the whole market pull back again. And of course, prior to that was, the .com bust in 99 and 2000 when it was above 40. So these levels are obviously fairly overextended for the S&P 500. We know that typically in the past, we've seen Bitcoin and the S&P 500's share correlation in general, especially to the downside. So I would expect if there's a pullback in stocks, that we would see a pullback in crypto as well.
So I want to show one of these last predictions that you had made for Bitcoin 2 months ago, which was the thing that finally got me to do it your way, wait for a confirmation. I was very big before that. Exactly. I love picking, catching and falling knives. I used to love doing that. And then it was this video, this time, that it actually clicked for me. Let me just play it real quick here.
When we're pulling back like this is to wait for a big enough pullback in this short-term trend. So from here to here, that would be the high, the low and the high. A 50% move on Fibonacci would be at that 64 line, like I was mentioning.
A 618 retrace would be at the 62.7, somewhere around this point here. So somewhere in this zone is where I'm trying to pay attention, right? Where this is where we tend to pull back. But I'm not really interested in getting in for that longer term upward move until we've confirmed a bounce off of this level by closing above the EMA that will start to show up at that point. And I use that short-term EMA as my guide for whether or not we've confirmed right back up to the upside. At that point, that becomes the higher low that has now been confirmed here. But the market needs to retrace here, find some full extension or full retrace here, and then confirm above the EMA before it's time to head back up again.
And that is precisely what occurred. I could not believe how accurate it was when I went back to my charts when that actually happened afterwards. So that's this area you're talking about over here in the video. Sorry, over here. And then, so you talked about that we would have this breakout. Let me actually draw the trends. That we'd have this breakout above the level, that we would have a pullback. And then as it pulled back over here, that would be the cue for the launch up.
Yeah, I think the prediction I had made there, I was expecting a bigger pullback, but it didn't end up happening. The pullback had already occurred at that point where your mouse is right now. That was the pullback that started the extension. So you could have considered that a confirmation zone. I was looking for one more pullback at that point, sort of a short-term retracement to confirm the extension, and it had already been confirmed by that point.
Yes, that's right. So that's the first part of it. But later on in the video, you said once it breaks out over here, then it could, because I was saying, well, after this breakout, would you confirm it over here? You're like, yeah, it should pull back here and then before it launched off.
Yeah,
and
for sure.
It did it twice. And so I didn't listen to you over here, and I missed out most of this move.
No.
Yeah, I missed out on most of that move completely because, in fact, I think I was short. I was short there, and I was furious. I mean, these moves we wait for how long? Like we wait for months before you get those moves, and I completely missed it. And I think from then on, I was like, okay, forget it. I'm never gonna do anything without getting my confirmations, and I'm looking for these types of pullbacks and using them because it's so easy to be in this. It's so easy to be here, not even before, and think that, well, I just confused myself that I should come back down over here.
I see what you mean.
And so when I got back over here, I was like, oh, well, when we got back over here, I figured we'd have to go back down there. So I short, think I'm going to get back down here and then move up, and completely missed it.
Yeah,
and
waiting for that confirmation tells us whether that higher high there was important. Indeed, it ended up being important.
That's right.
That's right.
I didn't see that at all. So I was super grateful for that very hard lesson. But and then since then, anyways, what you showed me with the VWAP stuff has helped me in consolidation zones, because the consolidation zones VWAP is just fantastic, I find. So I've been grateful for that. But I'm never going to miss those. I don't think I'm going to miss those big jumps ever again. So right. So here, what would you be looking at over? Like you would need like to regain this channel before you felt it was bullish again, or you just have to make it a higher high versus this guy?
That's right. Yeah, that more recent retest there, that retrace that occurred, if you were to here, I'll just run the Fibonacci here just to give you a sense of what I would be looking at here. So from here to here, it already pulled back to the 0.5 line, which is a fairly healthy retrace, and then it continued from there, right? So if we're just looking at the continuation of this move should mean that if we don't break past this 0.5 level where I just measured, then maybe it pulls back and retraces a little bit further to the 0.6 line. So let's push this move out a little bit further. That would push price back up to 101,500. And then if we don't push beyond that level, or if we do push beyond that level, I'd be looking for, of course, a retest of the most recent high or the all-time high. Then we move into a whole new range potentially, but this just isn't really enough of a correction for me to say that this whole range is confirmed. So I'm expecting further downside from here. And I think today's price action could tell us whether or not that's going to happen. If we don't break any higher than this 99,008 level, this could be the confirmation of a lower high again. And then we push back below and post a new a new low from here.
So one of the final things I want to ask on this is that when I make statements like the chart bounces off, let's say an EMA, and the amount of that move, and if it makes a new high, the amount of energy in that move, am I being, from your perspective, like silly to use physics terms as far as like literally the energy of the bounce, that if you don't make a new higher high in that bounce, that you just don't have enough, energy, the kinetic energy in that move in order to make it? Or am I just thinking about, it's
No, I
not
think
useful
you're
to think that way?
describing volatility there. That would be the same thing as measuring ATR or even just measuring volume. Volume would be coupled with the kind of energy that I think you're describing there. Most of that energy we saw occur back there in the beginning of November, when volumes had spiked up well above the moving average on volume, that pushed us into this new range here. That volume was our leading indicator that this is going to be a continued move here. So things have come down. ATR is definitely coming down. I don't even have that on my chart, but I can tell you right now, just looking at where price action is, we can see ATR is starting to come down, and it's going to pop in either direction here. Either we push back up and we find we retest this high of 108, and once we get to that level, sellers step in and that pushes price back down again. You'll see volume coupled with that, or we push back a little bit further. If I zoom out a little bit and just kind of look at this whole move as one potential move, just going from the more recent low to the more recent high, then I would expect it to pull back once more to either the $85,000 level or the $80,000 level before we come back and retest this high again. So I do think that, ATR in general, volume in general are helpful indicators to tell us whether or not there's some importance to the price action that occurred on that day.
Right.
And I don't think that's silly to look at it that way.
Okay, excellent. Okay, I like that. All right, so I have one thing I want to end on here. This is for my own aggrandizement. You'll forgive me for this, but a couple of months ago, we did talk about our Cardano versus Solana. And just to rub it into some of the people that I deal with in different crypto groups who talk to me, like, Cardano is an asset that should never be paid attention to. It's a zombie chain. It'll never move. I just want to play this clip from 2 months ago and then talk about it. 1 second. Actually, I don't want to go into the underbelly of what's going on these networks, but the argument that people make against Cardano is that it's a nerd zombie chain, that they spend all their times researching and doing first principles and putting out papers, and they go, we want number go up. Unless your number goes up, we don't really care. And I go, there's nothing more attractive to me in a cryptocurrency than a group of ardent developers who care not at all if the price is moving up, right? Like the OpenAI years ago, when they were asking Sam Altman, how are you going to monetize this? It's costing billions of dollars. How are you going to monetize
I'll ask
it?
the AI.
I'll ask the AI.
Yeah.
We'll figure it out later on. And he
Well,
was laughed at.
They didn't need to wait long. If they figured it out pretty quickly, didn't they?
Well, it still took several years, right? It was
Sure.
It was only GPT-3 that they accessed. All right, and so just to rub it in over here into the Solana bros, the performance. So Donald Trump gets elected. The pressure gets off. The XRP, Cardano, all the stuff that the SEC wasn't enjoying. And what did we see in Cardano? We saw it rip up. So we saw over here. This is Cardano, and it skyrocketed. It did a, what is that, 300% move for Cardano from after the election. Well, yeah, exactly, from after the election. And when we compare the performance against Solana, it undid its performance against Solana for basically for 6 months, and it's continuing in that trend. So I just want to make the point here that sometimes paying attention to the fundamentals of an asset, or I would argue all the time, if I'm going to be dealing with crypto long term, if I want to buy into crypto long term, I want to buy stuff that actually has some more than just number go up behind it, because when it's time, the time for it comes, well, then it's there, and it's been outperforming Solana for months now.
For months?
Well, November, since November 5th, or whenever the election was.
Yes. Okay. I got you there. Yeah. I think it was because I've been paying attention to Solana since the SEC of initially had listed out the tokens that they considered to be securities. And it was right after the SBF debacle. And Solana was absolutely, like, hands down one of the biggest winners there. Since the SEC originally had even just tweeted about that, Solana's up 906% versus the other tokens that are still in the hundreds. So even since the SBF crash, Solana's up, let's see, roughly 548%, and still beats out all the other assets. But on a short-term basis, yeah, I'm with you. Like, I see how Cardano is really taking off, but it's not really fundamentals, right? I think there's this idea that the popularity of a token, and how much people are talking about it, especially in Reddit subforums and within Discord communities, that popularity of conversation can lead to an obvious correlation in trading activity as well, right?
Yes, but the way that Cardano is being talked about, there's no hype behind it. In fact, a lot of the conversation is negative, even from within the Cardano community. They just recently had, they launched a governance layer to the token, and they had their first constitutional convention in order to ratify a budget and a bunch of proposals for the platform. And there's a bunch of infighting in the way that, like, the founding of the United States had a bunch of infighting amongst the founding fathers. And so it's almost like we're our own worst enemies within the space, but because we're trying to make it the best that we can. And so when I see stuff like that, like, there's no hype behind Cardano. There's just no hype behind Cardano. Even the XRP people, right? They had this hope of, or I mean, they still have this hope that they would take over the stable coin, the what's the terms that they use, but XRP had this hope, this promise that there would be this hype, this merging in all the financial assets of the world, and it also exploded. Doge has this hype that it's basically a play on, when you buy Doge, you're buying Elon Musk, and who knows what Elon Musk will do with that one day. Oh, that exploded as well. But Cardano didn't explode for any of those reasons that are anything hype related. And so I just like the idea that you can't really call it a zombie chain anymore. Right, that conversation just died off after November. No one called it zombie chain anymore because it went up 300%. To go, okay, it can actually increase, and that to me makes me feel really good. It makes me feel like this is an asset that I really like buying. I like the community. I like what's going on there, and I just wanted to put a pin in that. So I get this. A lot of people, if you bought it at the beginning, if you bought it last year, the outperformance is there. I totally get it. But when the moment comes for something, it can cause it to go up and it can cause it to go down. Luna, we saw what happened when Luna headed down to zero. Where some other asset like Doge can go from 0.00001 cent to whatever it is now.
So what's your prediction on Cardano?
Well, Cardano hasn't reached to all-time highs yet, so I'm expecting all-time highs within 2025 because they've essentially finished the basically like version 1 now of Cardano, and there's all kinds of different projects that are being released or being developed right now to be released in 2025. A better wallet, a privacy token, and then also trying to bring smart contracts to Bitcoin in a way that makes sense for Bitcoin, where you don't have to give up the custody of your Bitcoin. And so all that is very exciting, and I think that could push the price to well above all-time highs, which was $3.
Yeah, 313, somewhere around there, 315.
That's right.
Yeah, that's a big push. Obviously, a 300% upside here sounds great.
Yeah, and my prediction for Solana, $0. Just to get comments, just to feed the trolls there. $0 for Solana.
Let's upset some of the crypto bros. We know that's coming.
That's right. So the final one I want to ask for you is Nvidia. Are you still super bullish on that? Where are you in that space?
So I took profits on Nvidia. I'll actually share
full profits or
not all of it. No, I pulled some of it out. Here, I'll share my screen and you can see the total trade that I was going for here. So I did catch the falling knife here on Nvidia, buying in 4 separate zones overall. And I got pretty lucky on obviously the averaging into that position at 110.65. And my objective was to see this this Fibonacci extension complete at roughly 157. So my price target was between 157 and 161. We sort of wicked at 152, and when we pulled back that next day, that made me realize, oh shoot, I'm not sure we're actually going to make it the rest of the way here. So I started to pull some of that position off the table. Since then, I've obviously kind of regretted that choice. It started to come back up again, and I may add back into my position from here, but I'm just going to kind of hold and wait to see if we break this recent high of 150. What was that? 152.89.
Well,
And
then we
finally
might
complete
want to.
the move I was hoping for.
Right? Are you going to want to wait till you see global liquidity tick up, or does that not really have an effect on Nvidia?
Yeah, when it comes to common stocks, I think I'm less interested in external sort of macro factors like that. I'm more interested in the company itself. What are their earnings? What is their profitability? Nvidia is still an overvalued entity, though. So this is a tough one for me in terms of like my overall investment thesis. I tend to look for companies that are undervalued and hold them until they've reached their reach their full extension or reach their point of being overvalued again, or at least appropriately valued. And I need another opportunity to get into. Nvidia is one of those ones where this is a growth stock where you're really kind of banking on Nvidia being the key player in the AI space and one of the main providers. And I think they'll continue to win that game for another 18 to 24 months minimum before another obvious competitor starts to step in.
Nice. Okay. All right. I love that. Perfect. So bullish Nvidia. All right. So we'll leave it there for what was so bittersweet for me to watch our predictions, because as always when it comes to markets, you can be right, you can be wrong, you can be right for the wrong reasons and wrong for the right reasons. And we're going to go through all those. I love the transparency. So let's make predictions for the next year. Let's make that money. And anybody who is paying attention, join them along. If you have trades that you thought were particularly interesting that you're proud of, put it in the comments. If you join on any of ours, please let us know. We'd be happy to see that. But until next time, this has been us for After Hours. Thank you so much.
Thank you so much. Cheers, everyone.